Welcome. In this video, I will explain complete procure-to payment process that we call P2P process. In any organization, procure-to payment process starts with the identification of purchase requirement. This is where a department realizes it needs certain goods or services. Next step is purchase requisition. After identification of purchase requirement, the concerned department raises a purchase requisition. Purchase requisition is an internal document that its purpose is to officially request the procurement department to purchase those requirements. Next step is PR approval. After purchase requisition, it cannot move until it is approved by the authorized person. The authorized person checks whether the purchase is really necessary or not, whether the sufficient budget is available to purchase or not, or whether the purchase is as per our company policies or not. These all are checks by the authorized person. After that only he approves. After PR approval, the next step is request for quotation. Request for quotation is a formal document that's sent by the procurement department to the vendors and requesting them to provide the quotations for required goods or services. And next step is receiving or gathering the all quotations from the vendors. Next step is bid analysis. Bid analysis is nothing but comparing all the quotations. After receiving all the quotations from the vendor, the procurement department compare them based on the several factors. Here the main goal is select the most suitable vendor as per the business requirements. Next step is vendor selecting and master data creating. After bid analysis, company will select the most suitable vendor. If the vendor is new to company will create the master data of the vendor in ERP system. Master data is nothing but details of the vendor like vendor name and vendor GST number, vendor bank details, or vendor payment terms and condition. The same details company will use for the PO and invoice and payment terms and conditions also. Next step is purchase order. Purchase order is an official document that's sent by the buyer to the vendor to confirm what they want to buy, and it contains details of the order like quantity, quality, items, and delivery date, delivery location, and payment terms and conditions also, etc. In some situations, after purchase order will happen three things. One is advance payment request by the vendor. If the advance payment request by the vendor from the company side, authorized person have to approve the advance payment. After that only accounts department make the advance payment to the vendors. Next step is buyer will receive the goods from the vendor as per the purchase order. Next, quality inspection. Quality inspection is the process of verifying that the received goods as per the company quality requirements or not. The quality department inspects the goods or material by predefined standards and specifications. If any goods found damaged or non-quality goods, the goods returned to the vendor and get a credit note from the vendor. That is nothing but a debit note to the company. Next, GRN or MRN, goods receipt note or material receipt note. After quality inspection, company will create GRN or MRN. It means company officially confirms that the ordered goods have been received and accepted. GRN or MRN contains more important information like PO number, PO date, and warehouse location, and receivers details, quantity, and measures of units of measurement, etc. Next, invoice receives. After goods received and MRN is created, vendor sends an invoice to the company. It means vendor requesting the payment for goods or services supplied by him. Invoice is the official financial document. It contains invoice number, invoice date, and importantly, applicable taxes and payment terms. In many cases, invoice can be received before GRN or MRN. That means when the goods have been received, that time only we can be received an invoice. Next, three-way matching. This is one of the important control activity in the accounts payable process. Three-way matching is the process of comparing PO, GRN or MRN and invoice. Why? Because PO confirms what company actually ordered, and GRN or MRN confirms what company actually received, and invoice confirm what company actually have to pay. And three-way matching helps to prevent the fraudulent invoices and duplicate payments and double payments, and also payments for the goods were never received. Next, invoice posting. Invoice posting is nothing but a recording the approved vendor invoice in the company's accounting system. Once the invoice is recorded, it becomes an official accounting transaction and it creates the liability in the books of accounts. After invoice posted, if any debit note issued to the vendor earlier, or if any advance payment done by the company to the vendor earlier, and it should be adjusted here. And also check whether the company is eligible for the payment cash discount or not. Next, payment proposal. Payment proposal is the list of vendor invoices that are due for the payment. This list creating based on the payment due dates, payment terms, and available cash discount and other payment criteria. If it is required, invoices can be added or removed from the list before it finalized. Next, payment approval. Payment approval is the process in which the proposal list reviewed and authorized by designated approver, such as a finance manager or accounts manager. It based on the company's approver hierarchy, and also that approver ensure the vendor details and payment details, bank details correct or not. Next, payment to the vendor. Here, company release the approved amount to the vendor by using agreed payment method, such as bank transfer or NEFT or IMPS or RTGS or check. And before processing the amount, once again must and should check vendor details such as bank account number, IFSC code, vendor name or payment amount. And once everything is verified, successfully transfer the amount to the vendor. Next, payment posting. Here, company clears the vendor's outstanding by posting payment accounting entry in ERP system. If company paid by using early payment cash discount, it should be adjusted here. Final one is vendor reconciliation. Vendor reconciliation is nothing but a comparing the company's ledger with the vendor's ledger to ensure the both are same. Here accounts payable department verifies the vendor invoices and payments and debit notes, credit notes and taxes. If any differences find, it must be resolved. This is the overview of P2P process step by step. I hope it will use for your P2P process interview.